Welcome to Market Profile Nuance 10. In this session, we explore a fundamental truth. The shape of a profile is not just a static result, but a dynamic living process. Market profile is not only about the final shape you see at the end of the day. It is about how that structure evolves in real time, reflecting the shifting motivations of market participants. A trader who reads shape in time understands the process of balance creation. This perspective allows you to see the market's intent before the day is over. As Jim Dalton famously noted, it's not the final profile that matters, it's how it got there. This is the core principle we will analyze today. Traditionally, we categorize shapes using static labels: D shape for balance, P shape for short covering, B shape for long liquidation, and trend profiles for initiative. But these shapes are not permanent. They change as new participants enter the auction. A balanced D shape that begins to expand reveals a fundamental shift in market dominance. A change in shape acts as a signal. It marks the transition from neutrality to initiative, or indicates that one side is losing their grip on the market. In Nuance 10.1, we examine P shapes and B shapes specifically as mirrors of short covering and long liquidation. These are critical structures to distinguish. A P shape typically results from a short covering rally. This is often just short-term traders closing their positions after a sell-off that failed to find follow-through. It is vital to remember a P shape is not necessarily a sign of aggressive buying. Rather, it is a sign of the short side's resignation. There is a huge difference. If no new long interest appears at the top of the P, the market will likely rotate. This can lead to the birth of a B shape as longs begin to liquidate. Similarly, a B shape reflects long liquidation, forced exits as the market falls without aggressive new selling. The price drops under its own weight as bids disappear. A B shape isn't always a structured trend day. It is frequently a mechanical response to losses by over-leveraged long participants. Recognizing this prevents false entries. After a long liquidation, if shorts fail to drive the price further, absorption occurs. This often triggers a sudden short covering pump, turning the B shape back into a P. Now we move to Nuance 10.2. Here, we learn that these same shapes can actually represent the continuation of a powerful trend if the context is right. When one P shape is followed by another P shape higher, with both the value area and the POC migrating up, you are seeing true trend growth, not just covering. In a trend, rotations back into the previous value area are shallow or absent. Buyer aggression remains constant, pushing value higher session after session. Likewise, if B shapes form sequentially lower without any bounce or reaction at support, you are witnessing a structural downtrend. The selling is intentional and sustained. If the value moves in lockstep with the price drop, it is a sign of professional selling intent. This is structural, not emotional. Know the difference to stay on the right side. Most traders remain blind to these shifts because they make a judgment in the first 30 minutes. They apply a label and then stop observing the market's development. By assuming the shape is fixed, they miss the late day change in intent. They ignore the migration of value until it is too late to act. Consider a D shape that expands upward after noon. POC begins to migrate, previous highs fail to provide resistance, and the market transitions into full initiative. Always remember, shape is not a pattern to be memorized. It is a process to be read. The key lies in how value develops relative to the previous price action. Focus on the evolution of value. That is where the truth of the market is hidden. This concludes Nuance 10. I will see you in the next lesson.